All right. Hello, everybody. Hope everybody's having a great day. It is Thursday, a great day to be alive. Look at the markets. What happened? We got a crash going on. Look at this. Wow. The market's still up 0.34%. It's up 18.25%, 18.5 points on the day. And we've got a little bit of elevated volume. And look, AD foretold that we were going down. All you had to do is follow the money. And look at this. The hourly midband has been going up. VWAP is now started going down. So we'll see what this looks. This is the overnight high. And apparently we got above the overnight high last night or today. This was last night and we got above it today. And now we don't like it. We are going down. And the AD advancers over decliners are continuing to make lows. So we shall see if something happens and that keeps going down. Let's look at our big green monster. Now, my West Georgia students and Alabama students don't know about the big green monster, but the big green monster is the best thing that we have. This tells us that we are overbought and that we will probably see a down move, and we are at the point of control now. So this may serve as a little bit of support as we go on. But I don't know, the market could go, because when you're overbought, what does that mean? Overbought means that we'll come back into this fair value zone down in this area. So kind of the charts are bearish to me. Even though we did have a little zap up today, a little gap up, it wants to fill that gap. Look at this. Here's the gap, and there is a good chance that gaps fill. We don't like gaps in nature. We don't like areas of low volume. Water moves to an area that is lower, right? It just keeps going down. And so price wants to come in. This is volume, y'all, at different prices. And price wants to fill these voids. So we shall see if it indeed does that. All right, but let's see what our VIX is today. VIX is, it was in the 13 handle a while ago. Now it's popped its head above 14 as this little continues going down. So we'll see if VIX goes up anymore. But I don't know, everything looks really good. So let's look at our little mega account today, and let's just see how we're going. Now, we're going to be down money because what happened is our bill, our ETFs, Treasury bill ETF, went ex-dividend on the 1st. And so it's going to take several days for that to come back into the account. So let's see how we're doing today. Our net lick on this account today is 4/4/24, and it says that my net lick is, give me a second, y'all. It says that the net lick on this account is, show me a little feller. I just hope everybody's having a great day. It's a great day to be alive. It's a great day to trade. And like Tom Shosnoff says, the great thing about trading is it makes you a quicker decision maker. So even if you guys don't trade, it makes you a quicker decision maker. So we are at 187,678.16. Dag it, we are down just a little bit. But we are up. Let's see what we're up. This is hard to tell because we've taken money out. So we're not really up 3.91%. We are up through March. We are up 6.56%. So we're overperforming. We want to do between 20 and 25%, 24% a year. So we are definitely overperforming from what we should do. So now let's look at our Greeks and ratios today. Remember, there are 3 different ratios that I look at, or 3 different metrics that I look at to run our portfolio. And to run this little portfolio, let me do this. Hey, shut that dog up, will you? Is we run at, we look at our delta, and we look at our theta, and we look at our buying power usage. So our delta is 257. What does that mean? I go over this every day. 257 means we have the equivalent of 257 shares of SPY, or the S&P 500, in our account. We are long. We are a bullish portfolio, but we are relatively delta neutral because it's green, right? So we said VIX was 14. Let's put that in there. All right, the second thing that we do is theta. Theta is 118, which means theoretically I should make $118 per day in this account. Very cool, right? And then our buying power usage, let's look at that. Our buying power is for our ES positions is 59,212. 59,212. We don't include VIL. 59,212. So we're at 31%. Now, you'll notice that it's red on this. It's saying, hey, under this VIX scenario, we should not be using more than 25% of our capital. However, ladies and gentlemen, I have said, the great one, Bobby Gaines, have said that as long as price of the E-minis is above its 200 daily moving average, I can use 50% of my buying power. I've also said that as long as on the weekly chart, this is a weekly chart, as long as the 10 exponential moving average is above its 20 exponential moving average, that I can use, guess how much? I can use 50% of my buying power. So that's why we're going, I'm not upset about this being 31%. Okay. Now, we need to take care of some business because we have had some of our hedges fail. So let's see what's happened in the last couple of days. You say, Bobby, you mean why I have slept? I've had actual positions, things happen. Yeah, look at this. On the 2nd, you and I bought, look at this, 10 Black Swan hedges. We bought 10 hedges, y'all, for $1.55. How about that? So let's go find this. We bought 3,200s, 10 at $1.55. So let's put those in our spreadsheet. We bought 10. Let's go to the trade tab. And what did I say? What strike was it? Hold on. I can't remember. It was the 3,200s. We bought 10 3,200s. So let's put that in. 3,200s. So that means this goes with, let's see, what's 3,250? Hold on, let me find 3,250. Look at this. Goes with that one, I bet. So we bought the shorts. No, that's the BS shorts and loans. Let's see. 3,250. Here it is. 6 right here. BSH 11. See the shorts, 3,250? So this is BSH 11 loans. BSH 11 loans. Come on, Bob. Dang it! Damn it!
Bobby, I don't know.
I don't know either, Mama. I really don't. All right, so we bought those, and we said we bought 10 of those, and we bought them. So these are puts. That's a long hedge, and they're going to be in the same expiration as the 11. So the 11 shorts are at 78 days. So we bought those at 78 days. Well, not actually. Yes, it was yesterday. When did those fill? 79? Hold on. Let's see. That filled.
It'll be the same as your spreadsheet.
Same as my spreadsheet. It did to yesterday. So
your spreadsheet's updating for the day already.
Yeah, let's see. 78 is today. So I need to put this in as yesterday, though, Hal. So this will be 4/2/24, and we want it to be 78 today. So this should be 80. There we go. So now it's 80 to 78 today. Good. And we put those in for $1.55. Okay. So before I do anything, I need to go get those BSH 11s and put these in a little thing here. So let's go positions. Let's find BSH 11. See, here those 10 are. So BSH 11 shorts. Let's find him. BSH 11 shorts. Okay. So let me delete this, and I will ungroup the positions, and then I'll go get these and these, and we'll call this BSH 11 group position. Nice little, oh, come on now. BSH 11. Got it. There we go. Now, let's see what else we did. So our little activity here says not only did we buy 10 there, but we closed some of our short hedges, right? We closed 12 of the 3,800s at 20 cents, 12 of the 3,800. So let's go find that. 12 of the 3,800s. Here they are. Look at that, y'all. We closed 12 of those at 20 cents. So let's go put those on here. So let's go 20 cents, 0.20 cents. And we filled those on the 3rd. Beautiful. And on that hedge, how much money did we make? Was Daddy able to go to Applebee's? We made $1,756.32 on that little trade, which is really, really good. So that left us, y'all. That should have left us with 20 longs. See the BSH 6? Here's the shorts. Here's the 20 longs. So y'all, we are sitting really, really good. So we just added 10 loans and got rid of 20. That's 22. So let's see what we've got here. Now we've got 84 short hedges and we've got 168 long hedges. Y'all, that is beautiful. Now let's see what our actual risk is in our portfolio, right? Because this is important too that we need to look at. So let's go over here, hit cap requirement. And let's look at our ES positions and see what the, let me make sure everything's up to date and look at the risk analysis here. So now this is kind of sad, but we have $88,000 account, $188,000 account. If we had a 20% down move right here, and if IV went up to 25%, y'all, we would lose $213,000. Now, that's not good, but we know that we're not going to go 20% down in one fell swoop. It's going to take some time to get there. So what we want to do is get our little bit of theta up a little bit. Now, again, what was our theta? We want our theta to be above 0.1%, and right now our theta is at 0.06%. So I could probably sell 9 more naked puts to get this up a little bit, right? Could probably do that. Let's see if any of our trades is telling us to close it. Let me get rid of these, y'all. Just see our open positions. So let's do this and just do the blanks. There we go. So let's see if anything's telling me to exit, auto close, or get out of it. Nope, everything looks good. So let's sell maybe. When's the last things that I sold here, y'all? I sold those. Last time I sold, let's see how many I sold. I sold 6. Yeah, I don't know. Maybe I should do 6 today. Let's just do 6. So let's go over here and we're going to start some more hedges. Bought 10, so we'll sell 6. So let's go ES. Let's sell 6. And we'll call this BSH 17. This is a hedge. And let's go over here and see where we want to put them. All right, so we want to put them anywhere above 60 days, right? So here's 50, 57, 77, 78, 85, 106, 118, 134. I don't know. Let's see what we got in the 118 days here. We wanted to sell 6 more at $3 because that's where we sell them. See, that's 6 there. And I don't have a GTC order on those. Unbelievable. Bobby. Here, where'd they go? Hold on. 118. Is that where I had the 6 at? Yeah. Oh, okay. There's my working orders. Whoa. Scared me. So let's try another expiration. Let's see. 118. Let's try 106. Let's see if we got any hedges down here. Aha, we got 9 there. We got working order there. So I don't want to put any there. Let's see, 106. Let's try 85. Looks like we got things there and we've got there. But look here, we have no working orders at 77 days. So let's see what we got down at 77 days. See if we got anything down there at around the $3. I don't know what that is. It's going down. Yeah, let's do it down 77 days. So let's sell these 3,700s. Let's sell 6 of those. So 1, quantity 2, 3, 4, 5, 6. You know, I'm starting to say I might want to do 9. I think I do 7, 8, 9. I'm going to do 9 of those. So 9 of those, and we're going to try to get 325. Let's see if we can do that. Come on, little feller. Got to work your orders, y'all. So working that, let's try to move him to 315 or 320. See if he gets filled at 320. There we go. Hallelujah. So we went and sold 9 of these for what, 315 of the 3700s? Oh, we sold them for 320. 3,700, 78 days. 3,700, 78 days. 3,700s. 3,700s. What do we say? 78 days puts. This is short hedge. That's the short puts of the hedge. And then 78 days. Yeah. And then we went in on 4/4/24. And then we did them for 320. So we brought in credit of $1,423. So now we know we want to buy loans. So we're going to buy 15 loans. 3.5 is the ratio we want. So we're going to buy 15 loans at a break even. So if we sold the 3 tranches and we sold those at 320, how much do we need to do our loans so that we still make a profit of 0? Look at there, y'all. We could do $1.72. So I think I'm going to do $1.60 so we can make some money on our hedge. How about that? Make $90 on it. So let's do $1.60. So let's go back here and go to trade. And we're going to buy 15 of these. Bump up our little thingamajig, 14.15. And we're going to buy those when we can do it at a price of $1.60. And we're going to make this a GTC order, which for you students at the University of West Georgia and Alabama, this is good till cancel. And this keeps the order out there, right? So let's do GTC orders there. Now, we also want to have an order to harvest this when it gets down to 20 cents. Right now it's at 320. So we're going to harvest those. We're going to close position, close the full default of these. We're going to close it when it's at 0.20 cents. And also, don't forget, if you do it a day order, it will cancel at the end of the day. So you want to do a GTC order there. Beautiful. There you go. So we got our GTC order on that one. We're ready to go. Now, that's just the hedges. Y'all, we hadn't done our daily trade. Now, our daily trade, let's go back to our spreadsheet, says that our 111s and 112s, that I can do one of these every week. How about that? So let's do one of those today. And at the end of 15 weeks, we should have, how many of these things on? Should have 15 of these things on. Right now, we've got 15 of them on, but we've only got 8 short positions. So we're under allocated on our short positions. And the reason we did that, we had to close everything. Remember when we took money out of the account and moved it to another account? Now watch this. Here's the good thing, y'all. Look at this. This entire thing of us hedging, selling shorts, buying loans, y'all, a positive number is a credit. We have paid nothing for our hedges so far. Look at that. We actually have a credit for all of our hedges on of $402.36. That is really cool. So let's go do our regular 111 trade. So how do you do a 111 trade? Well, first of all, you're going to do a put debit spread and a naked put. It's combined of both things right at 120 days. So we got 118 days. And I want to spend just a little bit on the put debit spread. So we're going to buy something that's roughly at a 25 delta, right? Around in here, but I don't want to buy where I've already sold one. So I'm going to buy the 5,000 and I'm going to sell the 49.50. That'll cost me, now it's jumping around a lot. Let's just look at this trade. All right. This is a put debit spread. What does this look like? Well, let's go here and just click on it. And I want you guys to see this little trade. And let's go to curve and analysis so we can see what a put debit spread looks like. Look at this. Isn't it great? So it by itself only has a 24% probability of making profit. It's got negative theta, which means we're paying for it, and it's got negative delta. Our max profit is if price goes up into this little tent area here, and our max loss is what we're paying for it. We're paying $387 or so for this. But look at this. Look at the great hedge that you have to the downside, right? Our max profit is 2112.50. And what we like about this trade is that our T0 line, which doesn't look right at all, goes up, 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 up with each passing day. So you got this nice little trade here. So let's go ahead and put this in. And let's see, 775. Let's bump it up a little bit to 780, see if we can get filled. And boom, baby, boom, baby, boom. So let's go to our activity tab. So we got in for 780. So this is at 118 days, the 5,000 for 780. Put that in. So this is ES. What do we say? 118 days. And we did the 5,000. What, 5,000? No, is that right? 49.50? Hold on one second. My memory is so short, y'all. It's one of the first things to go. 5,049.50. And we did it at 780. So 780. Beautiful. So we sold one of those or bought one of those, right? And this is going to be the PDS 21 or 21st of these. And we said the 5,049.50 put. This is a debit spread because you're paying for it. 4,424. There we go. So I need to put BSH 17 into his little group. So let's go over here and go to positions. So this is BSH 17. Let's see, group positions, BSH 17. And let's see, where are my little, okay, here's my little PDS 21. Is that what I said, y'all? Hal knows. Hal will correct me if I'm wrong. Group analysis, this is PDS 21. All right, oh, come on, baby. All right, so now we want to put in our naked put. So let's go back to trade. Now, we're going to add a naked put to this little thing. God, look at that, y'all. Isn't that great? What a risk profile. Look at this, y'all. If the market goes up, we make $8,427. If the market goes down, Big Daddy makes $30,927 at expiration. All right. I like it a lot. And look at all these positions we got on. Oh, man, isn't this fun? That's great. Where else can you get this kind of fun? Don't answer that. All right. So now let's go and do our little naked put. So we'll go back to the trade tab, right? And we'll go to table. And what we want to do is go to the 10% probability of being in the money. So 10% probability of being in the money, that's a 10 delta. So we're going to sell the 46.50. And we're going to try to get 30.50 on that. See if we get it. Nothing, not a stinking thing. Go back over here. And let's go replace the order, make it less advantageous, 30.25. And filled, baby. So we did the 46.50 for 30.25. 46.50. 46.50 for 30.25. That's the price. Right? So we did this ES. This is number of contracts was 1. And this is naked put 21 puts. This is naked. This is at 118 days. Control your colon. And there you go. So we took in $1,500 worth of premium. We spent $400 out for a hedge. So that's right at $1,100 worth of premium that we brought in. That's where you make your profit. Because this, what we sold for $1,500, we're going to buy that back when we can do it at 95% profit. So we're going to keep 95% of that as profit. Isn't that good? That's over $1,000, y'all, that you and I are going to make so we can go to Applebee's and have a good time. So let's go over here and let's make sure that we put that in naked put 21. So here he is. So let's go to group position. NP21. Now, another thing that we can do is remember, we're supposed to close these naked puts when they get to 95% profit, right? So it's kind of cool that you can go look at them and say, let's say, find a naked put here. Don't have any naked puts there. Here's a naked put 13 is at 80% profit, right? Yeah. Naked put 14 is at 79% profit. Let's see, naked put 15 is at 63% profit. So there's no need to close any of those. Let's look at the other ones we've got. Naked put 16 is at 51% profit. Naked put 17, he's at 36% profit. 18 is at 31% profit. PDS, BS, naked put 19 is at negative 15% loss. Naked put 21 that we just put on. Oh God, we're down 3%. So you kind of see how it works, right? Now, I think we can buy some more bill. Now, Ed was talking about this yesterday. We're not using a lot of our, let's see how much cash we've got over here. We've got $174,000 of cash just sitting there. Settled cash about 131,000. And we don't have a lot of bill at all, do we? We've got 254 shares. Is that all? So if we could use, let's see, what is bill going for? Bill is going for 91.49 if we were to buy that. And we've got cash of, what's our cash balance again? Let's use our settled cash. 131,000. So if we take 131,000 divided by 91.48, looks like we could buy 1,432 shares of bill. Well, y'all, come on. Now, the good thing is that thing's paying out about 42 cents a share every month in the dividends. That's $601. Do you know how many times I could take my family to Applebee's for $601? A lot. So let's just buy maybe 1,000 shares because I think we're really under allocated. So let's buy bill. And we're going to buy 1,000 shares because you don't want to pay margin interest on these things. That's what I don't want to really do. So let's say buy the bill. Uh-oh, your account does not have sufficient buying power available for this. What is my buying power? Hold on a second. Yeah, we don't want to buy too much, do we? Oh, my cash, we only got 82,000 in buying power. That makes it a little different, doesn't it? I didn't look at that. Got to go to the most restrictive. 82,143 divided by 9148.48 is 897 shares. So you know what? I'm going to be under that because I want to give myself enough room. I'm only going to buy, let's see if we can buy about 600 shares. Let's do that. Let's edit my order. See if we can buy 600. 600 shares. See if we got enough buying power now. Now we ought to get enough. So that's going to take $54,000 is going to reduce my buying power here. Option buying power, 82,000. Reduce that by 54,000. Good. Let's see if that can go in. There we go. We just bought 600 shares of bill, and now we are using 91% of our account. Okay, that's how you do it. All right, questions? Bueller? Anybody? Everybody good? Everybody feeling good? All right, good. Hope you have a good rest of your day. I cannot wait to see y'all tomorrow or next Tuesday or next Wednesday, depending on which one of y'all classes y'all are from. So y'all be good. I'll see you tomorrow.